warm welcome to a special show called Understanding the Changing World Order with renowned global macro investor, author and philanthropist Ray Dalio, founder, co-chief investment officer and member of the Bridgewater Board. Over the past 4 decades, Ray has been a valued macroeconomic advisor to many policymakers and has been named as one of the 100 most influential people in the world by Time magazine. Apart from building Bridgewater into the largest hedge fund in the world with over $150 billion worth of assets under management, Ray Dalio is also the #1 New York Times best-selling author of Principles, Life and Work, Principles for Navigating Big Debt Crisis, and most recently, Principles for Dealing with the Changing World Order. Ray, it's an absolute honor for me and Nikunj to have you on board and speak with you. Thank you so much for making time for ET Now.
It's an absolute pleasure to be here.
Mr. Dalio,
thank you for having me.
Yeah, once again, on behalf of everyone from the Times Network, thank you for joining us. We have your new book, and both Anisha and me have read your new book. It's an absolute piece of art, Mr. Dalio. It talks about 500 years of economic history. You've looked at history of 3 reserve currencies, a fantastic video. So all of us are really enjoying reading that book, but now we really want to get into the basic message which you want to send across from that book. The video, sir, starts with a simple message that every time we have seen central banks go on binge of printing money, it leads to asset price inflation, and then we have a problem after that. Am I starting it right?
The cycle that I saw was brought about by seeing 3 important forces that I hadn't seen in my lifetime before, but happened many times in history, which is why I needed to study them, that cycle over the last 500 years. First, as you point out, when governments run out of money, they need more money than they can get. They create a lot of debt, and they print a lot of money, and it debases that money. We have had the largest debt increases and money creations, particularly in the leading world's reserve currency, the dollar, although that's been true in the euro and it's been true in the yen too. And that has a big effect. The second of those influences is really a political and social influence, which is the conflict between the left and the right. Populism, often, typically, due to large wealth gaps and opportunity gaps, which exist in the United States now. And so you're seeing a conflict, you're seeing almost a civil war, because as you have populism consists of people representatives who will fight rather than compromise, fight for their way of doing things. And so we have an ideological and economic differences that are also political differences that you could see every day reflected in the news. And you saw become in January 6th that the issue of losing. I think we're in a situation where we can have an election in which neither side accepts losing. And so we see that reflected all the time, such as the Supreme Court ruling on abortion. You see that type of conflict. That conflict, the measures, I like to measure things, is the greatest since 1900. And that also relates to the economic one I touched. And then third, as far as the changing world order, is the relative decline of the United States and rise of China and other countries. India, for example, of course, has improved its position, many countries. So that when the New World Order began in 1945, world orders come after a war, and then the victors in that war determine how things should go. When in 1945, when the United States won the war. It was the richest country in the world. It had 80% of the world's gold, and gold was money. And it had half the world economy, half of world GDP. And it had a monopoly on the military power, and it was the dominant world power. And that's why we have the United Nations in New York, the IMF and the World Bank in Washington, D.C. And that relative positioning, there's been a decline in that relative positioning and the emergence, particularly of China, as a great power. And so there is a great power competition taking place. And traditionally, through history, that is resolved by conflicts. So we have 5 different kinds of wars that happen, and we're seeing them now: a trade war, a technology war, a geopolitical influence war, a capital war, and a military war, the possibilities. So that confluence produces these difficult periods. The last one was 1930 to 1945, and that's what we're in the midst of. So it's very important for me as a global macro investor to understand those. And that's why I did this study, which I made into a book so everybody could understand them. It affects my positioning today.
Absolutely, Ray, and not only the book, the video as well, which has garnered over 12 billion views almost till now, also talks about that. But separately, you have written out a template in that book of yours that there is printing of money, which is followed by hyperinflation, and then there is a downturn and recession as well. Are we likely to see a repeat of that cycle now?
Yes. To be clear, when there's a lot of debt, since a debt is somebody else's asset, it's a financial asset that's being held. The more of that there is, the more difficult it is for central banks to balance that, to simultaneously have an interest rate that is not too high for the debtor and also adequate for the creditor. And that's why it's very difficult. And we're also in an environment in which there's a great desire to spend a lot more than is earned. That's why we have big deficits. Very little attention is paid to whether there's enough money to do that, because money can be produced. So what we see is the dynamic of governments, central governments, borrow the money, but they borrow it from their central banks who print the money, and that devalues the money. So that creates a cycle, a paradigm shift. Paradigm shifts happen about every 10 years, and they create from one paradigm to a new paradigm. One paradigm is one type. So, for example, the 1920s led to the 1930s, or the 1960s, which were very different, led to the 1970s, which were the opposite. So we are in an environment in which there needs to be large deficits, large spending, and the printing of money, which then devalues money in relationship to goods and services and in relation to even investment assets. And that starts to cause this paradigm shift, because most investors and most people are not used to inflation in the same way. So, for example, investors think that their safest investment is in cash, hold cash. But cash deposits, which they think is safe, is probably the least safe investment, because it provides an interest rate which is so much below the inflation rate. So, for example, in the United States, virtually a zero interest rate when the inflation rate is over 7%. So there's a 7% loss in buying power. So that creates that realization that they're losing buying power, causes them to sell those assets and to put the money into something else. And that worsens the imbalance. Inflation psychology and inflation forces when it gets into the system also causes other adaptations that produce inflation. For example, employees want to know that they're inflation protected in their wages. And so you see it reflected there. Or there's the purchases of assets, inventories for companies or houses, residences. There are purchases of those because they're inflation hedge, which causes those things to rise. So we are in a shift from one paradigm to a shift in another paradigm. And there's a necessity for that, because if they don't print that money, then they don't get to spend the money. Like if there's a social consequence right now, big wealth gaps. And if you have large wealth gaps at the same time as you have bad economic conditions, then there's the printing of the money. So central banks try to balance that inflation and growth. They try to get, the lowest inflation, not below zero, but low inflation, and they try to get strong growth. And so there's always that balance. And the balance now is going to be much more difficult because, so we've entered a period of stagflation because there's all these debts and financial assets, and it's very difficult to balance that. So that's the kind of environment we're in, a stagflation type of environment, and with a lot of conflict between different interest groups.
My follow-up question would be, a stagflation scenario is a terrible scenario for an investor. Bonds will not make money, cash is a terrible idea, and equity valuations will come down. So what is the best way to protect value of the money or your wealth?
Well, the most important thing is to not own debt assets which are subject to inflationary pressures. It's not, if you're buying an inflation indexed asset, that would be fine. They're inflation index bonds, but to not own assets which will lose their buying power because there's a lot of debt and has to be printed. The second is to create a diversified portfolio of assets, a well-balanced. If you diversify well and you look at the correlations between asset classes, you'll see that one thing goes up, another thing goes down. For example, during times of greater inflation, you see commodity prices, gold, real estate prices. You see those types of assets perform better at the expense of other assets. And also the stock market has parts of the stock market, these different stock markets, which are not primarily going to be hurt by investments. There's many that benefit by inflation. So to create a diversified portfolio, diversification is of paramount importance because it is the way that you can maintain a good return without as much risk. In other words, for example, if you pick investments that have about the same expected return, but they're not correlated, and you put them together well, you can reduce up to 80% of your risk without reducing your return. So how to create good diversification is, very important. And that includes country diversification.
What would the the changing world order do to currency? Historically, dollar has been the storehold of wealth and world's leading foreign exchange currency. Do you see this shifting to Chinese renminbi or the cryptocurrencies like Bitcoin?
All the currencies are now fiat currencies. The dollar, of course, is the leading world's reserve currency. They are related to each other. No country wants, in this environment of relative depression or relative lower prosperity, no country wants to see its currency go up too much. So the fiat currencies, there tends to be a fair amount of printing of money and then a lowering of that. We are in a temporary period that I would say will probably last 6 to 12 months of a tightening in monetary policy, but that will be the correction in the trend. That tightness will produce weakness in markets to be followed by weakness in the economy, to be followed by another round of easing. So I want to be clear, the printing of money and the large debt will have a correction as there is this tightening coming up, which will be probably over the next 6 to 12 months. But you'll have that. So as a storehold of wealth, and by the way, they won't bring interest rates during that tightening to a level that will compensate for inflation. So you'll still lose money to inflation, which it means it's still better off in those inflation hedge assets. When we look at the currencies, we're used to looking at them in relationship to each other, but they all have that issue. Then there are non-currency, non-fiat. Gold is an example of a non-fiat currency. Then, of course, we have digital currencies, which are newly developed, and that's a non-fiat currency. I think we've entered a period of time over the next several years where the world is going to be looking for what is an acceptable currency, and it's going to be confusing. And so these currencies will compete with each other. There'll be less attention to fiat currencies and more attention than to others. But still, of course, the dollar will be important. And then you will see the renminbi become a much more important currency competing because of a few things. Throughout these arcs of the cycles, I studied the last 500 years, and I found the Dutch guilder and the Dutch were the first reserve currency in the 500-year period, followed by the British, followed by the American, and so on. And you see how that happens. As the country gets richer and becomes the largest trading country in the world, larger percentage of world trade, they carry their currency with them. And so it becomes a medium of exchange and a storehold of wealth. And countries and people, therefore, in other places, want to save in that currency. And so that's why it's popularly held as savings. That saving takes the form of lending to the reserve currency country, and it contributes to getting more in debt. And then as they become a lesser share of world trade, with a significant lag, the currency loses its reserve currency status. China now is the largest share of world trade, a largest amount of capital flows outside. So it competes effectively. The Chinese have chosen not to internationalize the renminbi until recently. Now they are internationalizing that. By that I mean transacting in it for trade or using it for lending and borrowing. So we are seeing the internationalization of the renminbi, and that'll make it more important. Also, the effects of weaponizing the dollar have a challenge to them because the US dollar and US capital markets were free globally and free trade. And so now it's being more politicized. And sanctions mean freezing financial assets and the like. And there are greater concerns that that can happen as the US imposes sanctions such as freezing dollar assets. And that's also causing money to go into other currencies. Now, what those currencies are is going to be determined.
Ray, but where does cryptocurrency stack in this entire new changing world order?
I think that while cryptocurrency's been really amazing in that there were, let's take Bitcoin, and there are two types of cryptocurrencies. I'm sure you're referring to Bitcoin type, in which there is the quantity is contained, as distinct from other types of coins in which there's a variability, such as stable coins or Ethereum. But anyway, amazing that they were programmed and have operated for, I think it's 11 years now, haven't been hacked and so on, and have been acquired. Still, there are issues with them. The total value of Bitcoin, for example, all that money, is less than the value of Microsoft. And so when you think of different storeholds of wealth, it's not very big. By the way, the gold market isn't very big either. It's about 5 times the size if you take out central bank reserves and jewelry. But so they have issues. Transactions can be traced. So the privacy issue is not an issue. So they can be controlled. They can be shut down. They can be made illegal, which tends to happen during times when they may be threats to the alternative currency. And so I don't think they'll be held as central bank reserves for various reasons. There's a saying that gold is the only asset you can own that isn't somebody else's liability. In other words, you own it and you don't have to wait for a payment from somebody else. And I think that as the environment that we're in is an environment in which there is a risk of political confiscation or other forms of confiscation, I think that gold does a better job. But as I say, we're into this new environment, and that could include NFTs, could include all sorts of things. That is it something that you can carry with you, and that you can transact almost anywhere in the world because somebody will buy it. It's equally acceptable in most places, ideally private, if you can find those things. So it's a competitor, but I think in terms of its qualities, not as good a competitor. I think it's a mistake for anybody to have just one, such as picking a digital currency as this thing from and not having any gold, or not having any gold, or just having just gold and not having any digital currency. But we'll figure those things out. It'll evolve over the next 5 and 10 years a lot.
So, Mr. Dalio, a question which our Indian audience will certainly relate with is gold. Indians, we like the glitter of the gold. Do you think for next couple of years, gold should be a large part of a well-diversified portfolio?
Yeah, gold, let me tell you about gold as a generalization. Gold is has a return, normally it's low returning. It is a dead asset. It is a beautiful, limited supply, dead asset that is money. Unlike, let's say, equities, in which there's constant invention and productivity. So, but it's very important to own at some times. And at other times, it's just going to be a dead asset. And those times are these times of a lot of debt and money creation, and times of conflict, times of wars. In wars, even allied countries don't want to lend to the other country because everybody's getting in debt, and so they'll be paid back with a depreciated currency if they win the war. So I believe that this environment that we're in is an environment which is good for gold, and therefore it should be a significant part of the portfolio, but not a dominant part of the portfolio. What that might mean is maybe 15% of the portfolio. That would be, quite a large allocation. But under today's circumstances, perhaps, as much as that. And then there should be other assets that diversify the portfolio.
Well, absolutely. But Ray, just coming back to the old point that you were mentioning regarding the uprise of China and the 18th, metrics of strength that you were talking about. But the recent policy changes that we have seen and the recent geopolitical situation that is there in the world, do you think China has the muscle power to become the next big global economy?
I started going to China in 1984 and have a very close, intimate understanding of it. I've developed close relationships. I know the policymakers. Since I started going to China, its per capita income has increased by 26 times. Its average life expectancy has increased by 10 years. Its poverty rate, meaning people in hunger, has fallen from 88% to less than 1%. And even in bad times, it's growing at a faster rate than developed countries. We would like to grow at that rate. And it has a per capita income. It has a population which is more than 4 times the size of the American population. And if it had a per capita income, which was half the U.S., it would be twice the size. So there is no doubt that it is a competitor, a significant competitor that's growing faster and is likely to be, in most respects, larger. So at these times, when we look at these 5 types of wars or conflicts that we have, which is a trade war, a technology war, a geopolitical influence war, a capital war, and a military war. In those respects, it's roughly comparable. It's growing at a faster rate. So it is very likely to be a dominant, one of the great viable competitive powers in the world, and probably more so with time.
Absolutely, Ray. But you talk about the metrics that you need to really follow to understand the health of the economy, and this is exactly the way we track the vital signs to take care of a human body. In those metrics, how does India stack up?
India stacks up as a country in which one of the most important indicators is the cost of an intelligent person, a cost of an educated person. That's a very good leading indicator. And India stacks up very well in that regard. and its levels of indebtedness, which is another important indicator, is in comparison to other countries relatively good. These are two important indicators. The general level of education and infrastructure and internal conflict and so on are areas of greater concern. So and so is the element of the bureaucracy. It's a very it's a country that probably will have the highest growth rate over the next 10 years. We project it to have the highest growth rate of any country over the next 10 years because of the advantages of that, those things that I mentioned. And then to the extent that there is improvements in those, which it looks like there are improvements underway, then India's outlook looks very good.
Mr. Dalio, each crisis leaves a mark and they change the way we do things. It changes some processes permanently also. What is a permanent change according to you because of this COVID crisis?
Well, there's COVID, and more important than COVID is COVID, of course, has its impact, and I could talk about that. But I really want to emphasize that we are going into a world in which ideologies, as reflected in politics, will rule, and there'll be conflicts about that. In the world that we came from, it was primarily economically driven and primarily global. I mean, the way the world worked would be all the businesses and individuals and so on would make a lot of economic transactions, and which would allocate resources. They'd lend money, they'd put plants someplace else. It was all economic, and it was global. We are now in a world which is primarily going to be ideological, meaning that the ideology, both between countries and within countries, will rule. For example, when we think of the money flows and economic flows between countries, countries that are thinking about there could be war. Can I be shut off? How do I use capital flows as a weapon? How do I defend myself against those weapons? And that carries down. So you're seeing much more nationalism between countries and becoming less global to protect themselves, to be able to have those powers to defend or attack. And then you are seeing that within countries. For example, because the Twitter transaction, Elon Musk buying Twitter. Twitter is a political asset more than it is an economic asset. It has a great effect on the world. And so the decisions that the person who owns it can make about its policies, those decisions will have a greater impact than the decisions of the Supreme Court in terms of what our society is like. So you're seeing people with different views of what a society should be, using their economic power and their political power to determine things. And that also relates to, sort of the wealth gaps and so on. where the money went when there was when there was need for more money was directed by the government, understandably. And you have ideologies. So I think we are now, most importantly, in an ideologically driven economic and political system. And that's quite normal, typical, as you get into war types environments. In all wars, you just can't let the profit system rule. People might be motivated to make profits and spend on different things that might not be the highest priority for the country. And so in history, you see those ideologies. I think it's very important to understand that now, because you have to understand where the power is and where the flows will be. I think that's of paramount importance. Of course, COVID has had effects. They allow conversations like this. They allow greater freedoms. They're changing where people live, how people work. And it's also a reflectiveness of the amazing inventiveness, the vaccines quickly getting into place and so on. But in studying history, it was interesting for me to see that of all the things that we're talking about, these wealth gaps and the conflicts and so on, the biggest influence on man was acts of nature. Acts of nature were droughts, floods, and pandemics. And so we're coming into a period of time, I think we are in a period of time, with climate change and some aspects of the nature of infectious diseases that it probably will be with us in a period of time. That also produces, history shows, that also produces conflict. The Chinese call it, if things are going well, it's the mandate of heaven. And when you lose the mandate of heaven, that means that all of these things, come to the surface: financial, internal conflict, and acts of nature. And it's looking like we're closer to that kind of an environment.
Absolutely, Ray. Interesting that you point out about the ideological differences and the war. And this is coming in the context of the geopolitical tension that we are seeing in Eastern Europe between Ukraine and Russia. On account of that, do you see this as are we going to embark on a Cold War 2.0 now?
I'd be happy with a Cold War rather than a hot war. Yes, of course. The situation in the Ukraine is going to tell us a lot. Observing it and watching it. No one knows how wars transpire until they're in them. And so there are three big things that we will find out over the next several months, and they will tell us a lot. The first is, will Russia and Putin win, or will the Western powers win? By win, I mean, if Russia gains control of the eastern part of the Ukraine, if the economic conditions in Russia are not catastrophic. In other words, if there's a 10 or 12% decline in GDP, that's very manageable. If there's a collapse in GDP, that's a different thing. So if it's manageable, and if Putin remains in power and is on the world stage operating relatively normally, such as attends the G20 meeting, and the G20 meeting goes with him, then he will have won. it would be essentially a loss for the U.S. and the West. If he doesn't win, then there's a risk of escalation in the use of at least the threatening to use military, nuclear, or perhaps even using cyber in a different way. So that's the first question. There are irreconcilable differences. It's very difficult to imagine a settlement now and how that works, let alone being sustained, because that battle at that front looks like it'll go on forever. So it's very difficult to imagine that, but we're going to learn a lot. The second thing we're going to learn a lot is about the power of American sanctions, American-led sanctions, I should say. We'll learn about that. Will that shut Russia down? Will that have a big effect? There's a cost to those sanctions, which is that those who hold US dollar denominated debt or reserves are less secure in holding those positions and could be sanctioned, could be threatened. And then which brings me to the third thing we're going to learn, which is how countries align with themselves. Traditionally in wars, there are two sides, and there's and neutral countries. And we're seeing how that's lining up with the sanctions. So, for example, India, Mexico, Brazil, Indonesia, China, Middle Eastern countries, and so on, did not line up in support of those sanctions. And the question is how the United States and other countries are going to deal with that. What are the threats? What are the interactions? How is that being dealt with? So we're seeing how countries line up in this war. As I say, in the past, there used to be allied and axis powers. And we'll see it, like in World War II, in different regions somewhat differently. The war of sorts that will be global, but there'll be a European version, and then there'll be an Asian version. And not everybody will line up the same way regarding those two. For example, the Europeans and the United States are much more aligned in Europe than they would be aligned in Asia on this. So we're seeing how that all lines up. So those are the things that we will see over the next few months, and they'll be tested. Right now, from the world's point of view, we're in this state that it really isn't it's interesting news on TV, and of course it has big impacts on people's lives and so on, but they watch it on TV and then they pay more for fuel prices. But it really hasn't affected them. I think with time, it's more likely to affect us all.
Mr. Dalio, I'll not will not increase our appointment with you, but I'm just going to wrap it up with one lighter question. My friends on Wall Street, they have one complaint, which is that it is almost impossible to get Ray Dalio's appointment and a job at Bridgewater.
It is true that time is what I have the least of, regrettably, but it's not totally true that I won't interact. In fact, on social media, I'm very much enjoying the interactions. I post every day and put things out, and I respond to those on social media, and I'm having wonderful exchanges. And so, while it is true that it's difficult to have an appointment, it is not totally difficult to interact. It's probably easier to interact with me than with many people. As far as the getting the job at Bridgewater, I'm pleased to say that yes, it's in high demand. It's like to some extent, it's like getting admitted to Harvard type of thing. Although it's not just the grade point average, we're looking at different things like character and so on. And so I sympathize with that point of view. Of course, for everybody, I would encourage them to set up their own business too. I started Bridgewater, and so okay, that was where I was. You can do that too. And it's a wonderful journey. And so I think that life arc is an important thing to keep an eye on, to evolve well, yourself and do well, which was really the purpose of my first book.
Well, absolutely, Ray, and I can vouch for that social media engagement that you're talking about. That is how I got in touch with you as well. Thank you so much for making time for us today in this freewheeling chat, lending us your bird's eye view of how the macroeconomic situation is changing, and more importantly, for sharing your pearls of wisdom through your videos and books, because trust me, Nikunj and me would agree on that it's an absolute pleasure to be reading and watching all of that.
We always meet a guest and say namaste, so I'm going to do the same, both Anisha and me. Namaste and greetings from India.
Thank you so much.
Thank you so much. It was delightful for me too.